Hello traders, the title of the video is how to become an intelligent Elliott wave trader part 3. This is part 3, how to become an intelligent Elliott wave trader. I hope you have watched part 1 and part 2 and you are now ready to watch part 3 so you may become a more intelligent Elliott wave trader. This is not to insult traders, but it's to draw the attention to traders to things that they need to do to improve their Elliott wave trading skills. So in the first part, we were talking about using Elliott wave as a tool, all right, instead of a science, correcting error, admitting error, learning from the past mistakes, all right, and so on. In the second part, we were talking about the importance of the higher degree wave count. In fact, it's so important. Part 2, that traders understand the higher degree wave count, what's going on in the financial market. If you are Elliott wave trader, you are stuck on 1 minute, 5 minutes, or hourly time frame, daily chart, or anything, any time frame, and you don't know anything about the higher degree wave count, how it influences the lower degree wave count, and the interconnection between different degrees of wave count. One can go round and round and round. In the third part, which is so important because you need to, some traders may consider this as a blah blah blah, but personally I will be happy at the end of the tutorial because I know that I have already told traders the truth about the third thing one should know to become a more intelligent Elliott wave trader. Okay, sometimes it's wise to quit, or sometimes it is wise to admit that I'm not good at this, I'm good at another thing, I better leave this one alone and go and do something else. Is it stupid to admit that I'm not good at playing soccer or football, I'm better playing tennis? It's not stupid. So somebody may say, never quit. Well, never quit. If you are not good at something, should you be doing it all your life? That's the question. You can quit that and start doing something good. So when they say never quit, it means that never quit something that you are good at. That's it. So going back to the nitty-gritty about all right, becoming a more intelligent Elliott wave trader, part 3. The first thing that is so important for trader to understand is the reference point. So trader may say, Joel, you talked about it before. I'm going to talk also about the sectors. I'm going to talk about Fibonacci and Fractal. I'm going to talk about price action and structures. If you are an Elliott wave trader and you are counting Elliott wave, you understand what we have said in the first part of this series of video. You are applying a higher degree wave count. But if you are not aware of the reference point, you can go round and round and round. And you don't want that. In the financial market, there are reference points that the market analysts will always refer to. Like 2007, 2008, they will say financial crisis. All right? 2003, the market analysts will tell you that's the commodity boom, the start of the commodity boom. Year 2000, they will tell you that's the tech bubble. The technology sector came down. All right? So there are reference points. 2009, end of the quantitative easing by the Federal Reserve, all right, and a new cycle has begun. So those are reference points. So you may say to me, Joel, that's not part of the Elliott wave theory. Yes, it's not part of the Elliott wave theory, but as we told traders before, in the first part of this series of video, one should always combine the Elliott wave theory with other tools. So use the reference point in the financial market to improve your Elliott wave analysis. So how do you use them? Good. So if the S&P 500 began a bullish cycle in 2009, all right, that's a good time to look for stock that are about to trend. That's the good time to start waiting for the third Elliott wave. That's a good time to check stocks that are likely to go up because the market is beginning a new bullish trend. If in 2007, 2008, the S&P 500 is about to go down, all right, it is exhibiting a bearish pattern or is exhibiting a corrective pattern, it's the wrong time to try to buy and hold. All right, it's the wrong time to keep buying, but it's the best time to divert, to come out of the market if you don't want to buy anymore, knowing that the market will go down. So also, when you are counting your wave, and you see stock that are exhibiting the third area wave or stock that are exhibiting the first wave, when the market is about to go down, you will think of what? The S wave. You will think of S wave. You will still say that that trend that is about to begin is likely to fail because the market is about to go down. So you are combining your area wave analysis with the reference point to help you make better decisions. So this will help you to time the market, because the main challenge for many market participants is the market timing. So by using a reference point in conjunction with the area wave theory, you will time the market more accurately. You will become a more intelligent area wave trader, a more intelligent investor, a more intelligent technical trader. The next thing that you need to pay attention to is the sector. So apart from a reference point, if you're counting area wave or you are advising people talking about area wave, say that the market is going to go down, the market is going to go down, blah, 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 blah. All right? You need to pay attention to the sector. So when we talk about a sector, whenever you hear the word a sector, all right, take it from me. When somebody uses the word sector, bring into your mind straight away, ask the question, what are the market leaders for that sector? Always do that. Why? Because they are the engine of that sector. So talking about electronic arts belonging to the technology sector, the two engines for the technology sector are Google stock and Apple stock. So you have the technology sector. All right, we are talking about the sector. If the sector is going to be bullish, if the sector is about to begin a new trend, if the sector is about to start a correction, the market leaders of that sector will begin the correction. If you are trading any stock, same thing. If you are trading stock that belong to a component of indices like Dow 30, you will pay attention to the Dow 30 index. Trading stock that belong to the NASDAQ 100, you keep your eyes on the NASDAQ 100 index. You are trading stock that belong to the Nikkei 225, you pay attention to the Nikkei 225 index itself. Trading stock that belong to the CAC 40 or DAX 30, you pay attention to those major indices. You are trading stock that belong to the FTSE 100, their group. Check the leaders. So in London, the FTSE 100 is controlled by the financials, the banks. So you check the banks, what's happening in that sector. If they start showing corrective phase, you will be very careful about the FTSE 100 and stock that belong to the FTSE 100. So this sector, most importantly, the leaders of those sectors will influence your wave analysis. They can change the dynamics of your wave analysis. This is the big difference between ordinary retail area wave trading and the market analysts that are paid, vast sum of money to forecast the financial market, to advise that financial advisor that are advising their client. So you will always pay attention to the sector. There are fundamental traders out there and that are digging into the balance sheet of companies. All right. So those decisions are made by the fundamental trader, will influence the sector. But whenever you hear the word sector, think of market leaders. The market leaders will influence that sector and will determine the path that the sector will take. So if the sector is bearish and stock that belong to that sector, you want to trade them, you want to give priority to bearish signal if that sector is bearish. If the sector is bullish, you want to give priority to bullish stocks, yes or no. If that sector has peaked, reached the top of the bullish trend, we are in the fifth area wave, talking about a higher degree, fifth wave, not a lower degree, fifth wave, as we have mentioned in part 2, you will be divesting out of that sector, taking your money away and transferring it to another sector if you don't want to sell in that sector. Pay attention to the sector of that sector. I don't want the video to be too long. I'm going to move on very fast. Just to highlight them for you. Think of it, work on it, and see what you can gain out of it. Okay? The third thing, talking about how to become a more intelligent area wave trader, is to master Fibonacci and area wave. So I'll give it to you blank, and probably you hate me for it, and probably you mark this video down because of that. Is this: one cannot call oneself, okay, an expert area wave trader if one does not master Fibonacci and a predictive fractal. Now you see why I say that you hate me after I say that. But that's the honest truth. Sometimes you need to give it to people raw like that, and either they take it or leave it. Do not call yourself, all right, an expert area wave trader or anything to, all right, if you cannot master the Fibonacci. All right, talking about Fibonacci retracement, Fibonacci extension, Fibonacci patterns, all right, the predictive fractal, not fractal, talking about, okay, candlestick fractals. We are talking about predictive fractal pattern. The next step, so you may say, George, I'm a new trader. Oh, that's too much for me, George. If you're a new trader, you'll get there one day, all right? So just step one at a time, but I need to just mention it to you, give it to you raw, that at one point you will contemplate, you will delight yourself in learning to master Fibonacci and predictive fractal. That will help you to improve your area wave trading. The best market analysts that are focusing the market consistently, accurately, understand the Fibonacci extension, Fibonacci retracement, and the predictive fractal pattern, and they use them in conjunction with the area wave theory to focus the financial market. And if you want to become a professional market analyst or professional market advisor, you will embrace Fibonacci and predictive fractal in conjunction with the area wave theory. This is about becoming more intelligent area wave trader. So if you are already using area wave, all right, like we talked about in part 1, you are applying the higher degree wave count, but you are liking the knowledge of Fibonacci and the fractal, you need to catch up. That's the point I'm making here. The last thing I want to say about becoming a more intelligent area wave trader in part 3, very, very important. You want to be, listen to me carefully, you want to become the king, the king of the price action or the king of the price structure. So I can hear you laughing, which is okay. So you may say, Joe, because you live in England, you start talking about king and queen. All right, that's fine. So I will say one more time. In order to become a more intelligent area wave trader, one should become the king of the price action or the king of the price structure. So recently, I started posting videos at 24 Stock Trader YouTube channel, a channel that I use for stock analysis and chart analysis. And I start talking about price structures, all right, and other things, all right. You need to check videos there when I'm talking about price structure and to understand, and also about price action. If you call yourself an area wave trader, or if you want to become a more intelligent area wave trader, you must thoroughly understand, okay, the price action. I'll give you one example. Last time I recorded a video that I posted at 24 Stock Trader YouTube channel, a very interesting video, an essential video, and I titled it on purpose, I call it most powerful bullish trading signal one should know. Allow me to say again, most powerful bullish trading signal one should know. It's based on a price structure that if a financial instrument on any time frame form a new lower low, look, there's one here, there was a low here, there was this low, a price form a new lower low. If that new lower low is followed by a higher low, that higher low is a high probability trading setup. It's the most powerful bullish trading signal. So I will not dwell on it. The point I'm making here is that in order to become a more intelligent area wave trader, you must become the king of the price action and also of the price structure. I also recorded a video that I posted again on that channel, and I was explaining to traders the price structure. What's the title of that video? I'm looking for it now. It's something to do with the price structure, all right? How to use the price structure like a pro. What have I been talking about? And so on and so on. But take it from me. All I'm saying to you as an Elliott wave trader here, in order to become a more intelligent, Elliott wave trader, all right, you should become the king of the price structure. So usually, because most Elliott wave traders are the purest Elliott wave traders, they just want to use Elliott wave alone, which is a mistake. I mentioned in part 1, all right, it's a mistake to be just close in that symbiosis of Elliott wave. It's a mistake, all right. They understand the Elliott wave pattern, the price structure, talking about the Elliott wave theory, but there are other price structures out there, thousands of price structures. Like I mentioned to you now, a higher low after a new lower low is a high probability bullish trading setup. So, will you agree that becoming a king of the price action or price structure will help you to become, a more intelligent Elliott wave trader? Because sometimes Elliott wave traders are so close in their pattern, so they are looking, they say, which pattern is this one? Is it flat correction? Is it zigzag? While other traders already figure out what is likely to take place because they understand the candlestick pattern, they understand the price action, and they beat the Elliott wave traders. Shouldn't be. The Elliott wave traders should be able to beat anybody when it comes to the price action. But because those traders lack the knowledge and the skill to trade the price action or the price structure, they were not able to interpret the language of the price. What are we trading? We are trading the price. As an Elliott wave trader, we are keeping our eyes on the price. We are dissecting the price. But because we limit ourselves only to the theory, which is a powerful tool, we miss a lot. So I'm inviting you, I'm opening another door for you. Become the king of the price structure, the king of the price action. So those are the 4 things, talking about part 3, that you need to look at. Is it good for you? Is it another blah, blah, blah? But I am relieved now that because I have told you what you need to do. For me, I am free to move on now, okay? So first thing, talking about the third part of how to become an intelligent Elliott wave trader, use the reference point. Reference point, 2009, 2003, 2000, 1990, okay? And so on, 2007, 2008. This will help you, your wave come. Attention to the sector. Anytime you hear the word sector, think of market leaders. This is about the trending triangle. If you are trading stocks belonging to a sector, the sector has peaked, you want to know. How do you know? You pay attention to the market leaders. Master Fibonacci retracement, master Fibonacci extension, master Fibonacci pattern, master predictive fractal. And lastly, become the king of price action or price structure. This is about how to become an intelligent Elliott wave trader, a part 3. So this is the end of this series of video, part 1, part 2, and part 3. And if you want to become an intelligent Elliott wave trader, you have to watch part 1, part 2, and part 3. Most importantly, after you have accumulated the knowledge, take the next step to start putting to use everything that we have discussed. It will not happen in 1 month, in 2 months, over the year. Or you may think that this is another useless video today, but tomorrow you may come back and agree that, well, what we were talking about here makes sense. So, take it and work with it. If you have any question or suggestion, put in the comment section, and of course, I will be recording another video to answer your specific question. Alright. If you find the video truly useful, let us know by giving us the thumbs up. If you think that is another useless blah blah blah, let us know by giving us the thumbs down. If you think that is an essential tutorial, alright, multiple thumbs up, feel free, to share with your friend on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. We are the GSGW24 traders talking about how to become an intelligent Elliott wave trader, a part 3. This is the end of this series of videos. I would like to thank traders for watching this video, and we wish you the very best in your Elliott wave analysis. Happy to meet you all and speak to you soon. C'est bon, ça va.